All right, what's up, everybody? Mike Del Pre, Executive Director of the Arizona Real Estate Investors Association, and welcome to Not Another Lunch and Learn, where we do this every week, Wednesday, 12 p.m. on Zoom, Facebook, Instagram, and we bring in a special guest who is in the real estate business, provides service to real estate investors, and we just dig deep, dig shallow, depends what we get into, right, Derek?
That's
How far
right.
would you take it? But you're going to learn something, guarantee it. So welcome to the Lunch and Learn. Uh, our purpose here at Azreia, the Arizona Real Estate Investors Association, is to unlock and accelerate our members' ability to invest in real estate through education, market information, support, and networking opportunities so that they can elevate their financial well-being. We've been doing it for 20 years strong throughout the state of Arizona. This is our 20th anniversary, and we'll talk about that. Also, on the bottom of this, you'll see our social media handles or our website's azreia.org. We're on Instagram, Facebook, Twitter, YouTube, LinkedIn, you name it, TikTok. We're on there. You can follow us and communicate with us and on every platform. So welcome to Not Another Lunch and Learn. I'm just going to take a few minutes and just talk about Azreia and what we got coming up for those that are not familiar with Azreia. We do our monthly meeting on the second Monday of every month. Like I said, it's going to be our 20th anniversary, so come and celebrate with us. As usual, this meeting every month is at the venue 8600 in North Scottsdale. So it's at the Scottsdale Real Estate Association for Realtors. We always do our market news and trends. Sarah Perkins will be giving us all the data we need from MLS and the Cromford report and her thoughts on where the market is. So you need to see that for your business. We do also our trade show. All our business associates like Derek will be there. They're there. That's your wealth. That's your real estate team. So go there, meet the attorneys, meet the property managers, meet the agents, meet the contractors, the AC, the pest control, everyone's there for you to meet. So, and ask questions. So for this being our 20th anniversary and to be a little bit special, we do raffles for all our members. So come win some prizes. We gave away maybe, I don't know, Molly, how many was it? 15 prizes.
Like 15?
15 we got coming up. We got a grand prize from John Burley and his high-level coaching. We got Steve Train giving away some coaching, plus all our business associates chip in, and we buy TVs, computers, experiences, you name it. So you by showing up, you have an opportunity to win. We all like to win. So and the way you can have better chances of win is by donating goods to our charity. Every year we do a charity. This year it's Maggie's Place, where we support single mothers. Okay, so there's things that they need and we want to help them thrive. So we'll have a list of items you can donate, and you get more raffle tickets the more you donate. So come celebrate with us. We'd love to see you there. And our main topic for education is Al Williamson, and I have a slide and I'll break that down as to what he does. So second Monday of the month, then we drive down to Tucson the second Tuesday of the month, do the same thing. And then Phoenix Real Estate Club, that's the fourth Tuesday of every month here at the Central Phoenix office. So this is a must attend. We always have a great crowd of active investors. This is an opportunity for you to network and build relationships. We discuss what type of deals investors are doing today, so you get a feel of what kind of strategies are being used and how things are getting done. We do the haves and wants session as well. So if you have property for sale or you need some type of service for your real estate business, this is the time to find those people and connect. So that's the fourth Tuesday of the month. So back to the celebration for next month. Once again, 20 years supporting investors throughout Arizona. We have this list that they are at Maggie's Places requesting. So it's not really bring in what you think they may need kind of thing. We really want to, respect what they're looking for. So baby lotion, bottles, diapers, diaper bags, formula pumps. So if you have any of these items, please bring them in. We'll also be emailing the database members this list as well. So like I said, the more you bring in, you get a ticket to which wins something on the raffle. So I'd love to see you there next month. Subgroups, this is a big part of Azreia. So we do our main monthly meeting in Scottsdale. We do a main meeting in Tucson, but all throughout the month, we have meetings here at the Central Phoenix office, what we call subgroups. So as you can see, we have fix and flip, landlording, beginners group, raising capital, cash flow 101 board game, women's group, multifamily group. So we have all these different areas of real estate investing that we focus in. We have a real estate investor subgroup leader who donates their time. They're active in today's market. They're in the business, and they're there to provide a networking opportunity for everyone to get together in that same perspective strategy. So next week, I think we have the Phoenix Real Estate Club, and we have Fix and Flip, and then it goes. Then the first Saturday we have Cash Flow, and then it goes into the landlording group. So that's what we got coming up next. So go to azreia.org/calendar to see what groups are coming up. Also, not only do we provide 15 to 20 events a month for people to get in person and meet, we also want you to network online. So at the top right of our website, go to the forums, right? And we have multiple different categories that you could chime in on. You could ask your questions. The great part about this, these are Azreia members. These are Arizona investors. So you're going to get the right information about the right topics, the right resources to go in the right direction here on the Azreia website. So check that out. Core skills class is almost wrapping up. We're doing our 4th class today. Tonight we have contract basics. We're bringing in Focus Law real estate attorney Mick McGurr. So for 2 hours we have this high level attorney talking about contract basics for us. So because I know when you're newer to real estate, there could be a lot of myths like, am I going to get in trouble? Where do I get the contracts? I don't want to do something wrong. All these questions pop up, and Mick's going to answer those for you, along with any other real estate questions you have for him. But we will be talking about contract basics. This class is in person and online. So it's $60 for members, $80 for non-members. So you could buy the whole bundle for $150. Even though we're 4 classes in, we have the recordings, so you can have all these in the back end of your profile on the Azreia website, download them to your computer, whatever you got to do. So tonight, join us at 6 o'clock here at the office. And then next week, we'll be wrapping it up with Where's the Money? How do you fund these deals? We'll have Andrew Augustiniak from People's Mortgage. So all 5 for $150. Just go to the calendar. You'll see the contracts class, and you could buy all 5 if you'd like to do that tonight. So see you there. Launchpad is coming up. This is for people that are looking for a plan, right? Our goal here is to have a target put in place so you have something to aim towards, right? So you come to this class, we walk you through with a workbook, all 8 of these skills. So you'll walk away with a plan, a mini business plan that you can use for the next 6 months to a year or longer, right? So we'll fill it out with you. We're going to ask you a lot of questions. You really have to dig deep and figure out what you want. I'll be there to guide you through that. We have 2 self-assessments that we'll give you beforehand to take, so that you'll be better prepared for the event, which is Saturday, October 29th, 9 to 1:30 here in Phoenix. $30 for Azreia members, $100 for non-members. If you have a business partner or a spouse, I highly recommend you bring them. They don't have to be in the business every day with you, but you do want them to know what you're doing, right? You want to make sure you're both on the same path with real estate investing. So love to see you October 29th. You can sign up on azreia.org. And once again, our national speaker educator coming in November, Al Williamson will be speaking on how to generate passive income with or without owning rentals so you can retire in 2 years. It'll also be touching on a view from the new frontier, providing housing solutions for the mobile workforce. And what we're wrapping this up around is profitable extended stays in Airbnbs. And he's mainly going to be talking about arbitrage. How can you rent a unit from a landlord and then re-rent it out on other platforms to traveling nurses and stuff like that? So that's what he means by, no money, no credit kind of situations. I've done this. It's very lucrative. He's one of the top educators in the country. We met him at the National REIA in Milwaukee a couple months ago, so I'm super excited to have him here. So Monday, November 14th, he will present at our main meeting for the anniversary. Tuesday, he's going to go down to Tucson with us, and he's going to come back on Wednesday and do a drill down session. Then he's on a full day on Saturday, November 19th. So be sure to check out our calendar and learn more about Al Williamson. And I think in about 2 weeks, he'll be coming out on our podcast as well. So which we're on. Actually, we're on episode 47. We just recapped the monthly meeting last week, and the week before we had Brandon, who does creative financing. He had a great class. We had a full house here discussing subject twos, lease options, wraps, you name it, all the creative stuff you need to know to get more deals done. So check out that podcast. And what else we got? Yeah, so every Friday at 7 a.m., the Azreia Show drops on YouTube and all podcast platforms. Most importantly, largest joint venture discount benefit program in the country is Azreia and Home Depot and the National RIA. This year, you get 2% on all your purchases. So twice a year, you'll get a check back for 2%. Who does that, right? Paint program, you get 20% off all liquids all year long. Appliance program, cabinet discounts. So this all helps your bottom line when you're turning rentals and you're flipping houses. So you want to make sure as a member, your account is set up properly with Azreia and the Home Depot Pro account. We'd love to have you as a member. So we have two different membership options. That's $100 annual. So if you're going to be coming to Azreia less than 7 times a year, we recommend $100 a year. And then you pay a la carte $5 for the subgroups, $10 for the main meeting. And then you have the plus, right? So you're gonna be highly active, you're jumping in full force, you're gonna go to all the meetings, they're free, right? The big meetings and the subgroups are all free to show up, network, and that's $239 a year, right? These programs will be increasing November 1st, so lock it in before it does. We're going up to $250 on the plus, and we're going up to $125 on the basic. So you have an opportunity to lock that in and extend it, for about a week here. So love to have you as a member. Not only do we have Home Depot, we probably have 30, 40 other vendors, national and local, that provide incentives and discounts and benefits to your real estate business. They're all on our website on Azreia.org. So that's all I got in regards to Azreia. So thanks for being patient while I went over that. We have special guest and business associate Derek Kartchner with Gila Insurance. They do he handles majority of our members insurance policies when it comes to their flips and their rentals and a bunch of other stuff. But Derek, are you here, my friend? Unmute. Let's get you going. So today Derek's gonna be talking about ways we can save on insurance and a bunch of other stuff. So what we're gonna do is bring Derek on. He's gonna tell us about himself. And then we're laid back here. If you got questions, if you're on Facebook, you're on Instagram, you're here in the room, just drop a comment. We'll get that question answered for you. So Derek, man, I'll stop sharing my screen. You could take it away from here, man.
Okay, awesome. Let me
and tell us all the exciting stuff about insurance.
Yeah, yeah. I got to be honest with you guys. Jumping on to talk a little bit about insurance over lunch that's aggressive. That's super aggressive. So hopefully we can make it worth your time. So as Mike said, we do a lot with Azreia, both in Tucson and in the Phoenix markets. We actually operate in about 30 states. So it's one of those things that when you've got something out of state, we can also help with that. Mike, are you able to see my screen? Is it sharing properly yet?
No, it's not.
Okay, so hold on.
No worries. This happens every week. Right. I don't know what it is, man. Sometimes it's good. Sometimes there you go. What in the world?
There we go. Okay.
Insurance, we got it.
Okay, cool. So you're able to see my screen now.
Yes, sir. Let's do it.
All right. So what in the world? That's absolutely okay. What in the world is going on? If you've received an insurance renewal or if you've been shopping the market, you know that the insurance market is absolutely bonkers. And so what I want to do in the next few minutes is just kind of break down what's going on so you can understand the why behind it. Because I think if you can understand the why, you can put together a strategy that will help you to lower your costs. And we're going to talk about 4 ways that you can go ahead and do that. So I've got a disclaimer. Mike always has his be an adult disclaimer. And one of the things that when it comes to insurance, your policy and your company is going to be different. Not everything's the same. So to understand what your policy covers, you have to look at your deck page and your policy terms and conditions because they can vary from carrier to carrier. And so what I'm talking about today is generalized. I'm not talking about your policy specifically, but things that you can certainly look at. Okay. All right. So yeah, insurance rates, they are going sky high. I'm going to share some stats as to what truly is going on. So this is from the first quarter of 2022, which is the most recent information that we have access to. And from 2021 to 2022, first quarter, insurance rates, and this is across all lines, all types of businesses, increased by 11.6%.
Wow.
In comparison to, national average, you got rental properties or flips outside of the state of Arizona, 9.5%. So that's kind of what you're looking at, where, yeah, this is what it looks like. And in some cases, it's worse. How so? This is a little bit fuzzy because I had to pull it off of something that was a little bit small, but I think you can probably see it. Across all lines of business, it's 10%. But for auto insurance, it's 36%. So your auto insurance rates over the last 12 months. So the previous slide was, quarter one, 2021 to 2022. This is rolling 12 months. You're looking at auto insurance rates having increased 36%. Homeowners insurance rates and your landlord and flip policies, they're at 9%. So that's what the last 12 months look like. So it's absolutely bananas. So what's driving this? I mean, obviously it's inflation, but let's look at that and how inflation is impacting the insurance market. So your cost of new cars is up 14%, and your cost of used cars is up 55%, right? So when you think about who your biggest buyer of used cars is, it's the insurance carriers, right? You wreck your car, we're paying you to go buy a new car, right? And so that is a direct impact. All right, you don't total it, but you have a fender bender. Your average cost of vehicle parts is up 22%. All right. Well, same thing applies to what's going on in the homeowners insurance market. Now, these are stats that I found online, and your experience might be slightly different. But in 2019, your average cost to build per square foot was $129, right? It's a base model home. Today in 2022, your average cost to build a home is $175 a square foot. Okay, that's a 36% increase in the cost of construction. And the time to build a home has gone from 90 days to 7.5 months. Now, if you just scoffed and said, who's building a home in 90 days? Like, I get that, whatever. But the point is when you think about, as an investor, what we're protecting your house. Burns to the ground, we're going to rebuild it. At what cost? Well, today it's at $175 a square foot. And you're losing all that rent because you don't have somebody in the house paying you rent. You still have a mortgage on it. Well, rather than paying for 3 months, now we're paying for 7.5. Obviously, higher costs for your claims is going to equal higher rates. So inflation, the two biggest things that it hit the hardest, if you look at any study, was used cars and building costs. And what do insurance companies buy? Used cars, and they build homes, right? Wow. So it makes sense, but that's kind of what's driving. That's why we see insurance rates going through the roof.
Got it.
Yeah. All right. So what can you do about it, right? I mean, it's nice to know what's causing it, but what can we do about it? Like, there's only so many levers that you can pull to drop your rate, but we're going to look at some of those. And some of those just have to do with paying attention. And if you're not sure what to pay attention to, we'll go through some of these things. So the first thing, and this is an actual policy that's up for renewal on November 9th. Okay, and this is a report that I can see on my end, and it's terrible to look at, but I'm going to break it down for you. So what we've got is these guys have been with us for several years, and so this is from 2020 to 2021, right? And what we see is this inflation guard factor. And basically what this means is every carrier, and this is home, we're talking rental properties, we're talking flips. Every carrier is going to increase their rate and their coverage some, and they should, to keep up with inflation. So one of the things that we always hear is, man, my insurance rates go up every year. Well, they should, because by definition, the Fed wants a 2% inflation for a healthy economy. That's what the Fed said, right? It's what their target inflation rate is. And so we see when we go back to 2020, yeah, they were right on spot. So it was a 2%, 2.4% rate or increase in the value of the home from 2019 to 2020. And then from 2020 to 2021, they increased it 12%. So what does that mean in real numbers? They took coverage A, how much we're insuring your house for, it burns to the ground. They took it from 190,000 is what they would pay out to 213. So a 12% increase on the coverage. Well, obviously, that's going to have an impact on the rate that you're paying. Okay, so now let's look at what happened from 2021 to 2022. That's on this line. So last year, 2021 is 12%. So this is the same numbers, right? And now we're going to look at what's going to happen this year. And we see that they took it from $213,000 to $256,000 on the value of the home and what they're covering your home for. That's a 20% rate increase, or not rate increase, 20% increase on the value of the home. So they automatically increased your coverage by 20%. Well, what does that look like on a price per square foot? So in 2020, they were insuring it at $135 a square foot. So we just talked about what it cost to build a house in Phoenix, and it was $129 per square foot. We had it insured at $135. Last year, they increased the coverage to be $152, and this year, they're now putting it at $183. So they've increased the coverage. That's a 20% increase in coverage from year to year, or a total from 2020 to 2022 of 32% in how much coverage they're giving. And if you break it down, that's an 18% increase in the rate. So I know I just dove into numbers and we all shut down on numbers, but the bottom line is what's happening on your insurance renewal is the carriers are saying, look, it costs more to build. We're going to give you more coverage because we don't want you to be underinsured. And we'll talk about why that's a problem here in just a second. So we're going to increase your coverage, and obviously that increases the rate. Right?
But question, Derek.
Yeah.
But this is just temporary. They're going to lower them back down, right?
That's an interesting question. No, they're not going to automatically do that, right? And that's one of the things that we'll talk about a little bit later on. Like, you need to be reviewing your renewal. You need to take the time, whether it's once a year, you set it aside, look at your insurance, and you ask yourself, and this is the question and approach. Like, we have a pragmatic approach to insurance here at Gila Insurance, and that's like, look, if your home burns to the ground and you got a check for $256,000 this year, are you happy or are you pissed? Right? And really that boils down to, well, yeah, did I get enough to rebuild the house? Right? Because if you're short, you're going to be pissed. And if you got plenty, you're going to be happy, right? So in a couple of years, when I expect that the cost of building will decrease down to 135, if you're insured at 183, yeah, no, change it. You, as the insurance buyer, have every right to change your policy. You will never have an insurance agent or a carrier come out and say, yeah, you should lower your coverage. And the reason why is because if I tell you to lower your coverage, your home burns to the ground, you get a check for $256,000, or let's go back and say we lower it to $213,000, and that's not enough to rebuild your house. You're pissed at me. Now we're looking at litigation and all sorts of stuff. And so you'll never have a carrier lower that, but you as a buyer can certainly lower that and say, look, I did my homework. I talked to a contractor. I need less coverage. right? Okay. So yeah, I mean, this is what's happening. You're getting more coverage, you're getting more, but it's causing the insurance rate to be higher. Okay. Now, I had a pivotal moment. I was reading in a real estate book, Lonnie Scruggs, Deals on Wheels. He was talking about insurance.
Were you doing that recently?
Yeah, I mean, it's
Wow,
here behind me,
that's a
right?
legend.
I mean, that idea of writing notes on mobile homes is interesting, right?
All right, cool.
Yeah, but in his book, he has this line that he says, why is it that when there's a claim, your insurance policy isn't worth the paper that it's written on, right? And if you've ever gone through an insurance claim, yeah, it's always worse than it should be, right? And a lot of that is because we misunderstand what it is that we're buying. Insurance is what's called a contract of adhesion, meaning that they put out the carrier puts out and says, here's our policy. This is what we're giving you. And we have no idea. We don't dig into it. We just make assumptions. And then we're like, yeah, I'm covered. And then you find out after the claim, oh, wait, maybe I wasn't covered like I thought I was, right? But you can see exactly how your policy is going to respond before you have a claim, right? Like there's no secret. We just don't dig into the verbiage, right? Because it's terrible. Okay. So there's a couple of things that when you're talking about, hey, I'm going to modify my renewal because I think they're giving me too much coverage, things that you should know. And I want to dive in. And this is a deep dive for just a few minutes, but I think I've got a couple of examples that's going to make this make sense. Okay. There is in an insurance policy an insured value clause. And basically what this says is don't underinsure your house. Okay. And it's this complicated math, did over should, and if it's less than 80%, let's just look at an example to understand what we're saying. I got a house that's valued at $100,000. This doesn't exist, but it's nice round number, so we'll use it. So I insure it for $100,000. I have a claim of $20,000. So the insurance company is literally going to say, it's worth $100,000. You valued it at $100,000. You insured it at 100% of the value of the home. So as long as it's greater than 80%, they will take your claim. They'll say, did you insure it for more than 80% of the value? Yes. Okay, cool. We'll pay 100% of your claim. They minus your deductible and they'll pay you everything else. So in this case, we had a $20,000 claim. They'll minus your $1,000 deductible and you get a $19,000 check in this particular scenario. But what if I underinsure my house? And we see this a lot from investors. Hey, I bought it for $50,000. I only want to insure it for $50,000. So same scenario, the value of the house, the replacement cost, again, this goes back to the square footage of the house, is $100,000 for the house. Again, replacement cost. I don't care what the market says. I don't care what you can sell it for. I don't care what you bought it for. I only care what it's going to cost to rebuild. So you insure it for $50,000. You had it, it's worth $100,000. So you literally insured it for half of what it was worth. They go and they say, did you insure it for at least 80? No, then we're going to penalize you and they'll take half, 0.5, and they'll times that by the amount of the claim. Minus the deductible, you get $9,000. So underinsuring your house is a terrible, terrible idea. So when we look at the renewal and we see that this particular carrier increased the value of the home from $213,000, right, going back to our example, to $256,000, what they're really doing is saying, if we don't move it, you're going to be underinsured. And if you have a claim, you're going to get hammered on that claim and then you're going to hate us. So that's one of the reasons that we're seeing that. Now, if you know that you can rebuild that house for less than $183,000, great, insure it for less, right? But you got to understand why it is that the carriers are doing what they're doing, right? So these are things and tips as to things that you can do to just make sure that your renewal reflects the reality. And so in a couple of years, when that cost of rebuilding decreases, Yeah, decrease your coverage. It's all good. Mike, am I making sense?
Yeah.
Did I just lose everybody on numbers?
No, man, just keep going. You got it, man. I'm following.
Okay, cool. So the next thing that you want to look at is replacement costs. We see a lot of investors because there's weird investor programs out there that have, and this specifically happens on flips where they will insure the house at an actual cash value or ACV. And what that means is they're going to depreciate the loss before they pay out, right? So if you have replacement cost on your home, then you get new for old. You got an old roof, we're going to put a new roof on. Okay. You have actual cash value on your roof, we're going to depreciate the value of your roof and we're going to pay you out whatever the depreciated amount is. So, what does that look like? So, I got a roof with 20-year shingles and the roof is 10 years old and it cost me 10 grand to replace. In a replacement cost scenario, they basically say, okay, yeah, it's going to cost 10 grand to put a new roof on. Awesome. Well, minus your $1,000 deductible, we'll give you 9 grand. You got an actual cash value. They literally will take that 10 grand, times it by half the life because it's 10 years old on a 20-year shingle, and then subtract the deductible. And you can see, yeah, I went from a $9,000 payout, which is going to pay for most of the roof replacement, to a $4,000 payment. I get hammered. So these are just things that you want to look at on your renewal. Like, are you properly covered? Because ultimately, my rebuttal to Lonnie Scruggs is the reason that your insurance policy isn't worth the paper that it's written on is because you probably went and said, nah, I ain't paying more than X for my insurance policy. And so because of that, well, yeah, you bought a crap policy. So now that you've got a claim, now you've got a crappy experience on the claim,
So,
right?
question, Derek.
Yeah.
So now, I know nothing about insurance, right? Like, so is this something that your agent should be proactively updating you on, or do they not care, or do we have to take the initiative and make that phone call and say, and are they going to be in our best interest?
Yeah, so that's a really interesting question, right? So the insurance carrier, like every insurance agency is different, and I'll tell you the trouble with it, right? And I think it was Alan Langston once said this about property managers. The trouble with the property managers, they're great until they get enough clients that they suck, right?
Mm-hmm.
Well, your insurance agent's going to give you all the attention in the world until they get enough clients, and then they'll suck, right? And part of that is because, yeah, if I have one client, I can give you everything under the sun. But if I've got, 1,000 clients, now all of a sudden I got to spread that out. And so to answer your question, the insurance carriers are going to give you a lot of this information at the renewal. They will send you information that you need, right? But most people won't pay attention. In our agency, we actually look at it from the perspective of how much the rate increased. So if your rate increased more than 10% year over year, we're going to be communicating with you in a different way. And we're going to be proactively trying to get you to set up an appointment. If you ignore those appointments, I can't help you, right? But if you'll do that, then we will sign up for an appointment. We'll actually go through all of this on every property that you have. Because look, it might be that you look at it and say, oh, wait, I've got $256,000 in coverage. A couple of years ago, I had 190. Well, yeah, make sure that makes sense that my rate went up. But every agency is going to be a little bit different. But most people ignore the renewal. And so, they have no idea that these things went on.
Yeah. Awesome.
Right? Okay. So, tip number one is review your renewal and make sure that you've got the coverage that you want. Okay. Second thing is raise your deductible. I will tell you straight up, your deductible should be no less than what your sorry, just brain fart. No less than what Yeah, no.
It's over there.
What's your deposit? What your tenant's deposit should be,
Got
right?
it.
Now here's why. If your tenant burns your house to the ground,
Hmm.
right? Like, are you giving them their deposit back? No,
Mm.
right? Like you're not. They're gonna break the lease because now you got to rebuild this house, and you're not giving them right. So whatever it should definitely be no less. But I see it all the time that investors are like, oh yeah, I've got a $500 deductible. Why? Why do you have a $500 deductible? Theoretically, you have a business that is a going concern. You've got handymen or contractors in your network that can help you, in the event of a claim. But we see it all the time that investors have really low deductibles. So let me just give you an idea. If your base deductible is $500, and this actually came from one particular carrier that we represent, and these are the actual numbers, that if you raise your deductible to 1,000, they will give you a 10% savings on your property premium.
Okay.
Raise it to 2,500, 15%. Raise it to 5,000, 25%, and 10,000 is 46%. Now, what these carriers are telling you by this deductible structure is that most claims that occur are under 10 grand, right? That's why they're willing to give you a 46% deductible on the property premium. Like when I say property premium, like I can break it down and be like, yeah, you're paying X number for the house, you're paying X number for the contents, you're paying X number for the loss of rent, your liability. So it's on. You're not going to see a legit 10% line, but you're going to be able to save yourself a ton of money by raising your deductible, right? And when it comes down to it, if you are filing a claim that's $2,500, you're doing yourself a huge disservice because you will never recoup that back because the carrier will raise their rate, and now you're getting hit on some small stupid claim when you shouldn't have. Now, if you've got 100 homes with a $2,500 deductible, yeah, that can add up when you have a loss like 2010, where all of Phoenix just gets hammered with a hell claim. And yeah, that can have a big impact, but it's something to consider that you should not be filing small claims. But I will tell you, $10,000 claim, I do it all day long. Are you kidding me? If my rate increases 20% for the next 5 years on $1,000 premium plus my deductible, I pay $2,000 and I get a 10 grand roof. Like that makes 100% sense. But on a $2,500, like there is nothing worse than seeing a $2,500 claim on a claims report. It's so dumb. Don't do it. So raise your deductible. You'll get the savings, and you shouldn't be filing those kind of claims anyway.
Perfect.
All right. So that's tip number 2, raise your deductible.
All right. So I'm just going to jump in, Instagram, Facebook, online here, and Zoom. If you have any questions, or if you just joined us, this is not another lunch and learn. We do this every Wednesday at 12 o'clock. So we're here to answer your questions. So let's keep it going, Derek. Let's do it.
Okay. Awesome. Okay. Do a discount check. Now, this is where you got to get your agent involved, but let's take a look at some of the discounts that exist that you may or may not be getting, right? Number 1, join Azreia. If you're not a member of Azreia, hey, it's a 1% savings right off the top. 1% isn't huge, but these can be compounded to where it's like, yeah, 1%, now it adds up. You're using a property management service, that's a 2% saving. If you're coming to Azreia and learning, I should be doing background checks, credit checks, skip search, eviction searches, I should be requiring a tenant insurance policy or a renter's policy of my tenants. Mm-hmm. Yeah, those all add up. That's a 2.5% savings for being a good landlord. You tack that onto property management, that's a 4.5% savings right off the bat. And you're doing that because you're being a good landlord. Now, not every carrier has that, but a lot of them do. And more carriers are figuring out like, oh yeah, no, if they're a member of an association and they're learning these things, and they're doing these things and implementing this, they're going to be a better risk.
So I didn't know that. So insurance companies take investor associations.
Yeah, yep. I've got multiple companies that flat out ask, "Are you a member of an association?" So Foremost does that. American Modern does that. There are others, but those two right off the top, like they ask, and then they ask who it is, right? And so we'll plug that in and get that savings for sure.
Cool.
Yeah. Um, if you've got multiple properties, they will give you discounts because you have multiple properties. So it's a 2% discount if you've got two properties. 3 to 4 is a 5% discount. You got 5 or more, they'll give you a 10% discount, and that's compounding. That's on each property that you own. Okay. If you're bundling, we always hear about that as if it's some great thing, and it's not huge. But again, when these start compounding, it can save a ton. Yeah, you can get a 5% savings for bundling your auto with the same carrier that you have your landlord stuff with, right? Now, sometimes you got an LLC, or you're doing some things like that. That's not going to work, but those are things that you should absolutely be checking. And that's a conversation to have with your agent. Okay, the other thing that you can do on the discount thing is avoid surcharges, right? If you're buying a home that was built in 1899, yeah, you're going to be paying more for insurance because the probability of a claim is higher, right? Pipes are older. Go
Can
ahead.
I jump in? Sorry, real quick on the discounts.
Yeah.
So if I, a seasoned investor, we should have all that,
Yep.
right? So it just adds up. Like if it's $100 a month, just keeps numbers simple. You could add all this up. What do we got here? 20,
Yeah. So the tenant
25%.
screening is 2.5. So if you've got property manager, you remember, you're bundling. Well, we'll leave out the multi-property because that gets complex. But you're looking at 5.5 if you're a member of Azreia. You're using a property management company. That property management company is doing all this tenant screening. So that's 5.5. Plus you've got your auto bundled. That's 10.5% savings.
Wow. So then addition to that, you showed us about the deductibles.
Yeah.
The 10,000, another potentially 25%. So you almost cut your policy in half. Well, that definitely helps out with the inflation. It kind of washes that out a little bit and gives you somewhat of a discount still.
Yeah. Now, one thing that I would say on the deductible thing is, hey, if you can afford a $10,000 deductible, do it, right?
Yeah.
I will say that there are lenders that will cap it, right? They'll cap it and say, yeah, 2,500 is the most that we'll accept. So you got to check with your lender on that one. However, yeah, go as high as you can feel comfortable. Like if you're a saver and you've got, a bunch of rent sitting in the bank because you never spend it or pull it out, like, yeah, why do you have a $500 deductible? That's stupid,
Man, love it. All right,
Yeah.
just chime in on that. That was great.
Okay, cool. Yeah, so surcharges. One of the things that we see investors do that get themselves in trouble is they'll let their policy lapse. Insurance company is going to slap you with a 10% surcharge, right? Don't let your policy lapse, right? Figure it out. Figure it out. Pay attention. Make sure that if you move, and this is what gets us, is we'll see investors move and they're like, oh yeah, I forgot to tell you that my mailing address changed. Moving on from that, for time's sake, when we look at claims history, not all claims are created equal. Insurance carriers will penalize you for the type of claim that it is. So we often hear like, well, is act of God covered? Like I can't do anything with hell or wind. Well, yeah, it is covered. And moreover, like they're not going to hammer you too much on a weather claim because you can't really do much about it. I mean, 2% is the surcharge on a weather claim. That's not terrible. On a fire claim, they're going to hammer you 45%. Why? Because in most cases, it was something stupid. Or you've got deferred maintenance in such a way that it's like, yeah, you really should have updated that electrical panel and you didn't, and your house burnt down, and sorry.
Hey,
Okay.
Derek, got a question. Yeah. Eric says, my clue report doesn't seem to show any homeowners insurance activity. Is that unusual?
No, that's normal.
Oh, wow.
That's normal. Yeah, look, the reality is that claims are not common. They are not common like that. So insurance, we talk about frequency. They're not common. Then we look at severity, and that's really what you want to look at. You know, a lot of people say, well, I want a catastrophic policy. Yeah, so buy a catastrophic policy. Catastrophic policy meaning that we're here to protect you financially. If you lose $250,000 on an investment because it burns to the ground, that's a catastrophic thing to your business.
Yeah.
Paying out a $2,500 deductible or a $5,000 deductible probably isn't catastrophic. But yeah, no, most homes have never had a claim. Most investors have never had a claim. And that's the part that insurance or people get jaded and be like, never had a claim, but my rate goes up all the time. Well, yeah, that's because, you know, the value of your home's increasing, or I've never had a claim. Why the insurance is a ripoff. Yeah, until now all of a sudden you're staring at a pile of rubble saying, okay, I'm really glad that I'm getting a check for $500,000, right? I mean, it happens. We see it. So, yeah.
Love it. Thank you.
Okay. Tip number 4, this is self-serving, but hey, I'm giving my time. So use a broker. What I mean by this is, look, there's a lot of insurance agencies out there, and there are different models of how insurance companies work. Okay, Farmers, State Farm, Allstate, they can give you one company and one company only, right? If their rates go up, what can they sell you? Nothing. They can sell you their product. Now, that's not me busting on them. Those guys are great. And in some cases, those guys have better rates than me. In a lot of cases, they don't. But to give you an idea, I mean, these are some of the companies that we represent and quote our investor partners with, right? So Safeco, if you've never heard of them, they're a part of Liberty Mutual. They're a part of the 3rd largest insurance carrier in the nation. Travelers is the 6th largest insurance carrier in the nation. Steadily is a new player, but they specialize in landlords. American Modern and Foremost is a part of the Farmers company. So, I mean, you've got big carriers that are behind these. Nationwide, we know them. And American Modern specializes in really niche stuff where, yeah, they like your fix and flip and landlord type of business. So when you come to a broker, you're not getting one quote, you're getting multiple quotes. And ultimately what that does is it allows us to find, quite frankly, who's the cheapest without saying, well, I'm going to give up on coverage, right? And so, yeah, we go and we try to do apples to apples comparisons amongst all these carriers and find out who's the cheapest. And that's one way of saving a ton. I mean, when you see those things where it's like your average person who switched to Progressive saves $600 a year. Yeah, because in a lot of cases, investors don't, or people don't shop their insurance, and they should, right? We tell our clients, if your rate goes up 10%, we will automatically re-rate you and see if there's something better in the market. Now, if the entire market just went up by 11%, there might be nothing out there that's better, but there might be something that is. But also within our agency, even if your rate has never gone up by more than 10%, we will automatically re-rate you every 3 years, right? Why? Because over those 3 years, there's gonna be changes in the market. And that's what we tell people to do with all of their insurance stuff is shop it out. If you have a broker, they should be doing it for you.
Love it. I was wondering what, because we were promoting 3 tips and then you showed up with 4. I was like, I wonder what that is.
Yeah. Well, you know.
Oh, good, man.
Yeah.
I love it.
So here's the last thing, and this is not a tip, but I just want to be aware, like we specialize in helping investors, right? We do a lot of rehabs and fix and flips. We do a lot of buy and holds. We can help you with non-performing notes and force-placed insurance. We do a lot of apartment buildings. We really love those apartment buildings. They're somewhere between 5 and 30 units. Those smaller apartment buildings, a lot of your big brokers don't like those. We'll take them all day long, and we've got multiple options for those. If you're doing vacant land, we can help with that. But also, hey, give us a shot on your auto and homeowners. We can do all of that. So that's kind of who Gila Insurance is and what we have to offer. But ultimately, look, there's not a lot of levers that you can do, but to lower your rates. But if you're savvy, and Mike pointed this out earlier in the conversation, yeah, you can start compounding these discounts and get a 20-30% discount if you raise your deductible, make sure you've got all of your discounts and shop and just see what's out in the market. Now all of a sudden you're going from a $1,500, annual cost to, yeah, 8. It used to be, I used to say 6. If you're paying more than 6 on your landlord policy, then you're paying too much. But now the reality is that it's 8. But a lot of that has to do with the values of homes and just making sure that you're getting covered.
Love it, man.
That's what I got, man. I don't know if there's any questions out there that we didn't answer, but yeah.
No, it's great, man. Like, you know, I'm guilty of, like, in real estate, there's a lot of sexy stuff, right? Making money, chunks of cash, flipping, wholesale, or massive amount of rentals. But like, this is the important stuff, man. Having someone like you on our team, your real estate team to tell us about those discounts and checking your coverage at least once a year, right? Just like take a
Yeah.
moment, get with your broker, and just kind of that adds up. Hey, if you save $100 a month, $50 a month on a rental property times 10 property, that helps the bottom line at the end of the day, and we could easily forget and just let it slide.
Yeah, no, for sure. I mean, just like everything else, I mean, insurance should be a part of your business plan. And oftentimes you say, okay, here's my hard money lender, here's my long-term lender, here's my real estate agent, here's I've got, my team. And then you kind of forget about the insurance because, oh yeah, it's the insurance. But ultimately you want to make sure that you're getting covered. And we didn't really talk about what's going on in the liability insurance market. But we're going to see more investors get sued over the next couple of years because of what we expect to happen in the economy. And desperate people will do desperate things.
Yeah.
And in a lot of cases, they view, their landlord as somebody with deep pockets, even if they've got, 2 properties that are cash flowing $250 a month. And it's like, okay, yeah, so $500 a month and you're suing me as if I'm,
Yeah.
Donald Trump or one of these big real estate investors. Like, nah, it ain't happening, man.
Yep.
Like it's not those deep pockets, but they view you. It's the perception.
Love it, man. It's so if you have Facebook, Instagram, online here, you guys have any questions, we're almost wrapping up for Derek. So we'll definitely answer anything you got. We have an Instagram. We have the BPM RIA. How you guys? I know you guys have been active today. Appreciate it. Thanks for being here. They're looking you up. Do you do anything in Florida?
No. So
Well, maybe
we do operate in a lot of states, but Florida is one of those that we steer clear from.
got it.
Partly because it's just a weird insurance market. So much of it is insured by one carrier, that's Citizens. And when you see what just happened to Fort Myers, like, yeah.
Got it.
Yeah.
Interesting.
Nope.
But all the information is good, man. Maybe you guys could hook up or something. Love it, man. Well, we're good, man. What we'll do, so if you're on here, we will have this replayed on Instagram. We'll have it replayed on Facebook. Thank you for everyone for joining. Once again, Not Another Lunch and Learn every Wednesday at 12. Yeah, thanks for being here. And that's a wrap. Thank you, Derek.
Thanks, Mike.